At the January 28th FOMC meeting, the committee voted to leave the Fed funds rate unchanged at 3.5 to 3.75 range. Now, the market fully expected no move, but a couple of details still grabbed attention. First, there were two dissenters who favored cutting rates, Waller and Mirren. Now that matters because it signals at least some appetite on the committee to lean more accommodative, even with the headline decision unchanged. Second, Chairman Powell noted the potential for AI to be weighing on the labor market. Equities and rate markets seemed to take everything in stride, but metals reacted more sharply and volatility picked up after the meeting. Gold jumped more than 6% after the meeting, only to give the entire move back the next morning. A lot of analysts frame the sell-off as profit-taking in a crowded trade, while still seeing a slightly more dovish Fed backdrop as overall supportive for the gold market. Now, next week is huge for labor data. JOLTS on February 3rd, ADP on the 4th, and NFP on the 6th. If Powell is dialed in on the labor condition, any meaningful downside surprises could translate into more volatility, especially in the metal space. Now, if a trader believes that gold will bounce back from Thursday's selling, they could buy the April micro gold futures contract at 5,277 and target a move back to Thursday's highs of 5,600. Now, a stop for this trade could be placed below at 5,077. This trade can make $3,230 if the target is reached and risks $2,000 if you're stopped out of your level. Now, if a trader believes that gold will fall further, they could sell that April micro gold futures contract at 5,277 and target a move to the early January consolidation area of 4,700. Now, a stop for this trade could be placed above at 5,510. This trade can make $5,770 if the target is reached and risks $2,330 if you're stopped out at your level.